First of all, I think NIO is in a very, very hyper-competitive market here in China. Obviously, there is a bit, and there's typically a pullback in the beginning of the year when you enter a new calendar year, as the year-end numbers tend to be inflated a bit as dealers close. But even with that, given how competitive the market is, they've had to take down pricing in the second half of last year in order to achieve the growth that they were able to do in the third and fourth quarter as they launched new products.
Deliveries, stock performance, and potential. Just take a look at these numbers. In April, NIO delivered a staggering 15,620 vehicles, marking a solid 134% increase from the previous year. Despite this impressive delivery performance, NIO's stock has seen a sharp decline, plummeting 90% from $50 to $5 since early 2021. So here's the burning question: is NIO's stock truly undervalued at $5?
They have a brand strategy to broaden their brand portfolio. NIO was launched as a more premium offer with a services-oriented business model, which is why they spent so much in battery swapping and in NIO House. So that spread a lot of their CapEx out, a much higher burden and more burdensome business model than a typical automotive company. But they do have a strategy to diversify the brand portfolio. There are two brands coming. I'm sure we'll hear a lot more about that in the Beijing Auto Show coming in April, which are more mid-market and more, I think, affordably priced, and they intend to expand obviously into other markets as well.
Looking closer at the numbers, in April, NIO demonstrated impressive performance by delivering 15,620 vehicles, a remarkable 134% increase compared to the same period last year. This surge in sales was partly fueled by the introduction of their 2024 series, featuring upgraded versions of popular models like the ES8, ES6, EC7, EC6, and ET5T. On the other hand, NIO's counterparts, Li Auto and Xpeng, experienced varying degrees of growth. While Li Auto saw a modest increase of just 0.41% in deliveries, Xpeng managed a 32% year-over-year rise in vehicle deliveries. Despite NIO's strong delivery numbers, its stock has undergone a significant downturn, plummeting by 90% from $50 in early January 2021 to approximately $5 presently. This contrasts starkly with the broader market's performance, represented by the S&P 500 index, which saw an increase of about 35% over the same period. Notably, NIO's stock has consistently underperformed the S&P 500 over the past 3 years, with negative returns of negative 35% in 2021, negative 69% in 2022, and negative 7% in 2023. Comparatively, the Trefis high-quality portfolio, comprising 30 stocks, outperformed the S&P 500 each year during the same period. This raises questions about why NIO has failed to translate this success into positive stock performance despite its strong delivery performance. Additionally, amidst the current uncertain macroeconomic environment characterized by high oil prices and elevated interest rates, there are concerns about whether NIO could continue to underperform the S&P 500 or stage a recovery in the coming months. In addition, there are concerns surrounding global electric vehicle demand, as many major automakers are experiencing lackluster demand and are scaling back their electrification initiatives. However, the situation appears more favorable in China, where the government substantially supports the industry. China recently announced new incentives, offering 10,000 yuan, or approximately $1,410 for consumers to exchange their older gasoline cars for electric or low-emission vehicles by the end of the year. Despite the supportive government policies, the Chinese EV market is witnessing mounting competition and price wars. Notably, even industry leader Tesla has reportedly reduced production at its Shanghai plant due to increased competition. However, NIO may be somewhat shielded from the intensifying price competition in the Chinese EV market. This is attributed to its emphasis on premium products and promotional initiatives, such as discounts on its battery rental service introduced in March. Moreover, NIO is diversifying its market presence by venturing into the lower-end segment through new sub-brands. One such brand, Alps, will commence production later this year, expanding NIO's product range beyond its premium price bracket. Despite these strategic maneuvers, NIO stock trades at approximately $5.30 per share, roughly equivalent to 1 times consensus 2024 revenues. As for NIO stock, while it's encouraging to witness an uptick in deliveries, it's essential to temper expectations. Even if NIO maintains its current production rate throughout the year, it would only deliver around 180,000 vehicles, just 20,000 more than last year. This indicates that NIO needs to significantly ramp up its production volumes to achieve profitability. Comparing NIO's performance to its peers reveals a significant gap. NIO sold approximately 160,000 vehicles in 2024, but incurred a loss of about $35,000 per car. In contrast, Li Auto delivered 376,030 vehicles and turned a profit. This suggests that NIO has a long way to go to catch up with its competitors in terms of both sales volume and profitability. Furthermore, despite NIO's initial goal of achieving profitability by 2024, this target has been pushed back by at least 2 years. If NIO continues its current trajectory, it may not reach profitability until 2027. Thus, while there are signs of progress, NIO still faces significant challenges on the path to profitability. But before we move on, we just want to thank you for watching this far.
But you know we launched our second brand this year, which is Onvo. We hope this brand can enter the mass market, the mainstream market, given its high price to performance value. Of course, this means it will face even more fierce competition.
However, did you know there's a new catalyst for growth for NIO? The company has launched a mobile app for its mass market sub-brand, Onvo, known as Lideo in China, signaling its entry into the family car market. The Onvo app, available on both Android and Apple platforms, mirrors the layout of NIO's main app, featuring sections for content recommendation, charging services, car purchases, online shopping, and user profiles. A notable feature of the Onvo app is a letter from William Li, NIO's founder and CEO, accompanied by a promotional video introducing the brand's first model, the L60. Li explains that Onvo, derived from On Voyage, symbolizes a pleasant journey and aims to cater to the family car market, positioning itself as a companion for every family's growth. Li further outlines NIO's strategic vision, which involves starting at the high-end market, building capabilities across various aspects, and eventually launching a mass-market brand like Onvo. The brand's official launch is scheduled for May 15th, coinciding with the International Day of Families, with a live-streamed event showcasing the unveiling of the Onvo brand. The introduction of Onvo marks a significant milestone for NIO. The brand's first model, the L60, is poised to compete with the Tesla Model Y in the smart, family-centric all-electric vehicle market. NIO aims to target this market segment with a competitive price point of around 250,000 yuan or $34,600, positioning Onvo as a compelling alternative to existing options. With the launch of Onvo, NIO aims to accelerate its journey towards producing 1 million vehicles and expand its market reach in the evolving electric vehicle landscape. Stock surge, deliveries, analysis. But can NIO really hit that $10 mark? In 2024, NIO faced the typical challenges of the EV industry, with lower production and delivery numbers, resulting in a tough period for NIO stock, witnessing a significant decline of 37.41%. However, recent trading sessions have seen a turnaround, with a notable gain of 30.45% for NIO shares in the past 5 days alone. This surge, further boosted by an 11.65% increase after the latest market closure, suggests a potential easing of the tough times for the EV sector. Investors found reassurance in NIO's strong performance compared to its competitors last month, with a significant increase in deliveries. In contrast, competitors XPeng and Li Auto saw much smaller increases in shipment growth. NIO's introduction of the upgraded 2024 ET7 luxury sedan and a new partnership with Lotus Technology are seen as potential catalysts for continued sales growth. Analysts are divided in their assessments of NIO's prospects. Barclays analysts downgraded the stock, while Morgan Stanley analyst Tim Seow set a price target of $10 for NIO shares, implying an upside potential of 112%. With growing deliveries and the introduction of new models, NIO shares could potentially reach a valuation of $10 by the year's end. So, with all these developments, viewers, do you think NIO stock is undervalued at $5? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to learn more about NIO's future, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.